So, you spent years learning to read the markets and probably 0 hours learning to read yourself. And then you wonder why you keep buying at the worst possible time. Look, I'm not here to lecture you on what you should do. But I want to talk about something a bit more specific. I want to talk about how you think about price. And to be clear, I'm not talking candlesticks or price patterns. I want to focus how you think specifically about price. Because trading may be a business, that doesn't stop most traders thinking from the perspective of a customer. And we all know customers pay retail, merchants pay wholesale. One buys because they like the product, the other buys because they like the price. That shift could take you from a trader who's stuck to a trader who's profitable, or at the very least nudge you in the right direction. So let's get on with this. Let's imagine you run a business, you need to restock your inventory and you call your supplier. He's got what you need, he's got it in stock, but he's only got one batch left, so he offers it to you at 10k. You begin to negotiate. He also tells you that if you can wait a week, he has a new shipment he can offer you for just 8.5k. Now, assuming you can afford to wait, you wait. It's not even open to discussion, right? You wait because you know what side of the trade you need to be on. Now, contrast that to trading. You're looking for the same opportunity. Buy low, sell high, buy low. But all of a sudden, you're reacting to the market like a customer who's just walked into a shop, surrounded by shiny toys, and has no idea how much things are worth. You just walk in and know that you want it. That, ladies and gentlemen, is a motivated buyer. And a motivated buyer is more likely to pay over and above the asking price. Now, imagine you spotted a trade. Price starts moving without you. Now you feel intense, and that logical reasoning becomes murky. You negotiate your rules and you jump in because you don't want to miss it. I can still make a profit is a thought that goes through your mind, and now you begin negotiating with your rules. You jump in on impulse and pay whatever the market's asking. Right now, today's price, full retail. Now, the market didn't become more valuable at that moment, but your emotions did. Your emotions became stronger than your rules. So, what's the difference between a trader who looks at price moving and thinks, I need to get into this trade, and the trader who looks at the exact same move and asks, is this actually a good price? Is there a good deal on the table? Also known as, does this setup line up with my rules? Same chart, same candlestick patterns. One feels urgency, the other sees an opportunity, as long as the terms are fair. And if they're not, they will look to negotiate a better price. Contrast that to being a trader. Negotiation looks like patience. It's what we call sitting on your hands. Because the market already trades between premium and discount. So you wait in order to negotiate a better price with the market. Remember, a good negotiator is always ready to walk away from a bad offer, and a disciplined trader is always ready to walk away from a bad trade. And yes, it can be difficult to walk away. It can be difficult to sit on your hands. I know this, but this is the game, and patience will serve you well. Now, think about the last time you got into a trade on impulse. What kind of offer did you accept? The market offered it high and you jumped in with both feet. A customer pays today's price. A merchant waits for their price. So, here's the uncomfortable truth. Markets need people who don't think like professionals, because somebody has to chase, somebody has to panic, and somebody has to pay retail. Every trade has two sides. One side consistently pays too much. And if you've been trading for years and still you find yourself buying at the worst possible time, this might explain why. I mean, I've watched this happen at scale. Traders who knew exactly what they were doing technically, could read a chart, understood the setup, but when real money was on the line, something switched. The knowledge was still there, but the behavior changed. Not a strategy problem. It's not an information problem. That's an execution issue. And at this point, you probably already know how to read a chart, you understand market structure and price patterns, you've got your risk and trade management rules, you know what to do, you built that skill, you're not a beginner, and those skills remain with you. But the thinking and feelings that cause you to sabotage your account, they're there too. And that's why when real money gets involved, you stop acting on what your rules tell you should do, and what you already know. You spent years learning how to read the market, yet you probably never looked at yourself and learned to read your own behaviors when in high pressure environments. Trading is a high pressure environment. And this is why the customer blames the market, but the merchant takes accountability and adjusts. Look, next time you're looking at a chart, don't ask yourself if it's going higher or lower. Ask yourself this instead. If this is my business, I'm a business owner and I need stock for my inventory, would this offer make sense to me? Am I buying at value? Or am I being overcharged? Do I think I can get a better price if I wait? Remember, the market isn't the shop, it's an auction. And in an auction, people overbid because of adrenaline. Merchants don't bid on adrenaline. They already know the price they're willing to pay and they wait until the market gets there. What looks like a trade is often just an emotional reaction wearing a strategy as a disguise. Let me say that again to you. What looks like a trade is often just an emotional reaction wearing a strategy as a disguise. You convinced yourself it was a good setup. You found reasons to justify it. But underneath all of that, you just reacted emotionally. Because you can't predict where the market is going. Even if you're able to call it sometimes. You have to put that down to luck. That's just luck, and luck is not a strategy. It's not a strategy for success. So start asking yourself, if I buy here, am I buying at discount? If I sell here, am I selling at premium? Because that's the merchant's edge. They always buy at discount to sell at premium. Remember, consistent traders don't chase price. They wait for their price. So let me level with you. If you've been trading for years now, 3, 4, 5, 6 years, and you're starting to realize that the biggest challenge isn't you reading the market, but it's more to do with reading yourself and understanding your own behavior when you're in the market, then you're the exact type of trader that this channel was created for. So please subscribe. Thanks for watching, and I'll see you in the next one.